Insurance in Texas now costs more than mortgage for many homeowners. Yes. In the last few years, we've seen a lot of this. I never thought I'd be talking about this in 24 years, but here we are. This is an article from the Wall Street Journal from a few days ago. Let me explain why this is happening and how you can prepare to make sure that you're not stuck in the middle of it. When you buy a house, most first-time buyers, your payment includes principal, interest, taxes, and insurance. Taxes and insurance make up part of your payment, your monthly payment. And usually prepay the first year in what they call an impound account. I'm not going to go into too much detail, but that's how they kind of calculate what your payment's going to be. So let's assume all that, right? What's happened the last 2 years is, let's start on the insurance side, is that you're starting to see a lot of insurance companies not issue new policies to potential new homeowners. AAA, Allstate, Farmers, State Farm. And the reason is because they have so many losses in Florida, hurricanes, California, fires, that they pretty much stop issuing for about 18 months to see what their losses were going to be, which then leaves out-of-state brokers and government agencies to provide that insurance. Well, because of that, your insurance is pretty much doubled now. So instead of it being $2,000, for example, for me, it would be close to $5,000. I've had 2 instances where one of them, house was 10 years old, gated community, beautiful, nothing wrong with it at all, less than 10 years old. They wouldn't insure it. They wouldn't insure it. The buyer had to finally find an outside broker, and make a long story short, it cost him $5,500 when it should only cost him $3,000. So his property taxes almost doubled. I'm sorry, his insurance almost doubled. Taking into consideration that if you buy in a flood zone or a fire zone, you're really gonna pay $6,000, $7,000, $8,000 a year to be in that zone. So from an insurance standpoint, before, we used to automatically estimate to $2,500, and if you calculate it from there, you can't do that anymore. What you need to do is, the minute you find a house and are in a contract, get an estimate immediately. Don't wait till the end like we used to do it. Get it, especially if you're in a flood zone or a fire zone. If you don't know how to look that up, send me a DM. I will give you some links to where you can go do that. Second is property taxes. Here, for example, in California, in my county, it's 1.25 of purchase price. So I bought $500,000 times 1.25, about $5,800 divided by 12. That gives me my monthly property taxes. What you're starting to see is these newer developments have what's called Melrose, special assessments. They're at 2%, 2.2%, almost double. So instead of $5,000, you're paying $10,000 because you are paying for future infrastructure, future parks, future roads, future sewer, all of that. And then if your property includes an HOA, if your community has an HOA, put that on top of the extra property taxes and the extra insurance, and bam. I know people who are buying houses cash who aren't getting it insured because they don't want to deal with it. That's a risk. If you have a mortgage, you have to have insurance, just so you know. It's not an option. So before, we used to calculate it, estimate it, and then work out the details. Not anymore. What you need to do now is, if you find a house and you're under contract, immediately find out what the property tax base is, and immediately get 3 estimates on the insurance, homeowners. And that way you avoid any issues on the back end. Now remember, no matter what, real estate is still one of the best ways to create generational wealth for you, your kids, and your grandkids. If you don't believe me, look at your parents, look at your grandparents, look at their real estate portfolio. Is it more challenging? Yes. Is it more expensive? Yes. Do you have to save more money? Yes. Does it take longer to buy your first home? Yes. That does not mean that it's less powerful.